In the final moments of any crisis, we see maximum volatility. In recent days, we've witnessed the shockwave throughout the global markets as uncertainty looms. Today, we will discuss how China is claiming their devaluation is due to the Fed's rate hike. You came here for the truth, so let me unveil that for you. I want to get into this quick video today, outline exactly what happened, break it all down for you, and connect a few dots. We're going to start with a little bit of humor. This is from the China Daily Style editors, and it's China Daily editors and reporters. And basically what they're trying to disseminate here is the propaganda. So check this out. The People's Bank of China adjusted the rate of the renminbi's reference rate versus the US dollar, and the value of the yuan has since depreciated. The daily rate is decided by market conditions, according to them, that is. Do not call this a devaluation of the yuan, as that would imply that the government, rather than market conditions, sets the daily rate. Pass this on to your friends, they said. So right here, this is complete and utter propaganda. What they're saying is that the government does not decide what the rates should be. It is the market that decides. Well, there's no such thing as a free market, and that's just a fact. When they're buying up all the shares around the world, how can this be claimed to be anything real? It is a joke. It is completely fabricated, but this is the kind of thing that you see because the mainstream media will project that to the people, and the people will spread that around. It does a very good job of that. So that's just a little bit of humor for you. Let's backtrack into what exactly happened. This article is out of Bloomberg. If you want to read it for yourself, this outlines everything that has gone on. China has cut its holdings of U.S. Treasuries this month to raise dollars needed to support the yuan in the wake of a shock devaluation 2 weeks ago. All right, so that's the basic news. And then they said this: channels for such transactions include China selling directly as well as through agents in Belgium and Switzerland. So I just wanted to note this Belgium particularly. Hold on to that thought for a moment. I want to continue on here. China has communicated with U.S. authorities about the sales, said another person. They didn't reveal the size. Now, the size of which I've seen reports in the hundreds of billions, so this could be very large. And in fact, even though, yes, there are trillions out there that we need to be concerned about, billions of dollars, hundreds of billions especially, is a very serious number. The People's Bank of China has been offloading dollars and buying yuan to support the exchange rate. So this is one thing that we need to understand, that they're doing so for a purpose, something that I've gone to many times before. I'm going to move on to this article out of Fox Business. China's devaluation of its yuan currency should not be made a scapegoat for the recent global stock market rout, according to this Chinese central bank official. What he said here was, I'll quote him, China's exchange rate reform had nothing to do with the global stock market volatility. It was mainly due to the upcoming U.S. Federal Reserve monetary policy move. And he must have read that memo because he didn't use the word depreciation, devaluation. So this individual, the Research Institute of Finance and Banking, he said that the concerns over a possible U.S. interest rate rise this year might have fueled capital flight out of the emerging markets, and basically said, hey, Federal Reserve, don't increase your rates because that's going to give the fragile emerging markets some trouble, so you better not. Well, this is what happens, and there's a big fight because nobody wants anybody to increase the interest rates, but they know how desperate they are to actually do so. If you want safety and security, you cannot have 0% interest rates. This cannot be sustained. It's going on for a record number of years now, and this is getting worse. Look at this here. I just want to quickly note this: China and Belgium Treasury Holdings versus China Forex Reserves. I have two charts to show you on this, but the Belgium factor, I've often heard people talk about Belgium as being the ECB. Now, I obviously don't have confirmation on that at all. We don't even need to think about that necessarily, but just something to note that many people feel that Belgium could be the ECB or could be someone else there, but we'll never really know for sure. Belgium U.S. Treasury Holdings, you can see the decline right here corresponding with exactly what's going on in China at this time. Very interesting. no doubt there. We're looking at billions of dollars trading hands at this time. In my book, this is what I wanted to note from this, is basically when you have the situation that China's not buying as much of the treasuries, they're selling off their current treasuries, they need that money. So they're not going to buy as much of that debt. What does that mean? Well, of course, it's this. The fact remains is that the Federal Reserve will be the lender of last resort. They will buy up all of the shares. They'll buy up all the treasuries. They'll do anything it takes to sustain this game. Let's look at this here. China's top automaker, SAIC, says its H2 market outlook is grim. So this is just one more indicator here. I don't like to necessarily look at the Treasury Holdings in Belgium and this and that, although I do show them. It's important to look at real indicators like this. Are people buying the real goods? Are people doing that? Not central banks, not computer algorithms buying up shares in the stock market. I'm looking at people, the real economy. This is one indicator, and it does not look pretty. Then we look at this 7-day Rev Repo. You may be interested in this if you're into the technical indicators, but here basically showing you that yes, they had to do all of this effort to manipulate their exchange rate, and here is one more indicator showing you going back to a few years ago this amount. Man reportedly leaps to his death over the stock market crash in China. This is quite sad, but we do see this anytime there is a crisis where people have so much of their money, all of their savings invested into these markets. It is a very bad scenario, and this is the kind of thing that will occur more and more, unfortunately. If you found this video informative, please give me a thumbs up. And don't forget, last but not least, my book is The Money GPS. If you are interested, you can always go over to Amazon. They have a look inside feature, which allows you to flip through the book to see if you like it for yourself. Take care.